soit dedans, c'est ça? So welcome everybody to our webinar today about the Omnibus Package. My name is Mike van Kauffenberg. I am the director of Deveco. Deveco, which is a company of the Atos Group in Luxembourg, is a consultancy firm specialized in ESG strategy and in reporting, and of course, everything around the corporate carbon footprint. I am joined today by my colleague Manon. Manon, I'll let you introduce yourself.
Good morning, everybody. So I'm Manon Quinty. I'm a CSR senior consultant at Deveco.
So the topics today will be, of course, introducing the Omnibus Package and the key changes which they bring with it, and then talk about the challenges and the opportunities for the companies that are impacted by this Omnibus Package. At the end of the sessions, we have foreseen a question and answer session. Please feel free to pose all your questions during the webinar in the chat. Our team will collect them and they will give them to us at the end. But you also can, at the end, feel free and to pose your questions at the Q&A session. After this webinar, we will, of course, send you the presentation with a thank you email. And if you need a certification for participation, please tell us and we will send it to you after. So by now, I will leave the word to Manon to present you the Omnibus Package.
Thank you, Mike. So indeed, first, what is the Omnibus Package? So there are some key elements. So it's important first to talk about the context. So one key element is the release of the Mario Draghi report in 2024, which underlined the European Union competitiveness is declining compared to the US and China. Then, in response to this report, the European Commission launched the EU Competitiveness Compass to boost the European Union's economic performance with strategic measures. Another key element, of course, is Trump election, which brings a lot of uncertainties. So the Omnibus Package is a result of this context of political, geopolitical, and economical uncertainties. So in February, the European Union launched Omnibus, which is basically a set of regulatory updates. It's important to note that it's not yet approved. It's a proposal. So the key objectives are first to reduce regulatory burdens, simplifying processes, to make it easier for business to grow and to operate efficiently. Second, to enable business growth, but by creating a more supportive environment for companies to expand. Then, of course, create quality jobs, ensuring that economic growth translates into real opportunities for workers, for everyone. And finally, to attract investments and secure funding to support the transition toward a more sustainable economy. We'll also see that it will affect a wide range of EU regulation, so including the Corporate Social Responsibility Directive that you must know, and the Corporate Sustainability Due Diligence Directive, also known as CSRD. It also brings updates to the EU taxonomy and the Carbon Border Adjustment Mechanism, CBAM, which is a tool introduced by the European Union, which is basically a carbon tariff of imports of carbon-intensive listed goods from countries with less strict climate policies. We'll talk also a bit later about InvestEU, which is a European program to give an additional boost to the sustainable investment, to innovation, to job creation in Europe. So the process of the accessing to the funding of InvestEU will be simplified too. We have also some positive development about sustainability. So the good news is that the European Commission is still committed to the Green Deal objectives, to the climate goals that you know, like the climate neutrality in by 2050. And the European Commission has also announced the Clean Industrial Deal, which goal is to help polluting industries, let's say, such as steel and cement, to make the switch to the carbon, to the net zero emission transition, and to help boost climate clean tech technologies and companies. So I will now focus on the key omnibus changes for the diverse regulations. So let's start with CSRD. Previously, the reporting threshold was set at companies with more than 250 employees, and the new proposal is to increase this to companies with more than 100 employees and one of up to 1,000. Sorry, very important, this number, and one of two criteria. So more than at least 50 million in turnover and at least 25 million in balance sheet value. So basically, you can remember that it will decrease the number of companies subjected to CSRD by 80%. So it's huge. So regarding the application now, it has been delayed by 2 years. So the non-listed large companies will have to report in 2028. We are not sure that also the groups will be in the scope up to now. So the threshold, we don't know if the threshold will apply to them yet. And the listed SME will have to report in 2029. About the double materiality now, it remains unchanged. So that means that companies will have to both assess the double materiality, so the impact materiality and the financial materiality. Let's move to the other slide. So about the data points, so it's a huge change because it's a simplification of the reporting, basically. So you will have less data points to report. So first, the original proposal was about 1,200 sorry, I am a little bit stressed. Data points, and now it will be revised with a 70% reduction. So mainly on narrative data points. Also, a big change is a sectorial standard. They have been abandoned, which is not a good idea for us, but
it's a very good announcement, we must say.
Exactly. And regarding the value chain, it's very important to understand the switch, because for companies which will not be in the scope of the CSRD anymore, so up to 1,000 employees, the Commission would adopt a voluntary standard, which is a VSME standard. So the voluntary standard for small and medium companies. So it will act as a shield. So that means that limiting the information that companies or banks subjected to a CSRD can request from companies within their value chains. We'll come to it later. Finally, the proposal regarding the audit is removing the possibility to move from a limited assurance with planned transition to reasonable assurance. So now it's just limited assurance. Basically, we can say that the audit will be less strict. Let's move now to the CSDDD. So the threshold remains unchanged. the application will be delayed by 1 year, and the coverage, which is the main change. So now, so the original proposal was to require business to monitor both direct and indirect suppliers in value chain. However, the new proposal limits due diligence to direct suppliers only. So unless there are serious doubts about the human rights beyond the direct suppliers, of course. And the monitoring will be every 5 years instead of each year. Always on the CSDDD, the supplier risk assessment. So there was no restriction on information before, but now the new proposal is to limit to VSMEs for companies less than 500 employees. Additionally, while the original proposal requires companies to terminate contracts for non-client suppliers, now the requirement has been removed. So companies are expected to, let's say, focus on engagement, improvement measures, and also about civil liability. There is a big change because it's removed. So companies are no longer legally liable for due diligence failures under this regulation. Another big shift is the climate transition plan. So it has been softened, let's say. Instead of mandatory implementation, companies are now required to adapt transition plans over time. Let's move on the last regulation, so the EU taxonomy. For those who don't know what is this is regulation, it's basically a classification system that determines which economic activities are considered environmentally sustainable. So originally it's applied to all companies in scope of CSRD. It was very simple. Now it will only apply to business with more than 1,000 employees and more than 450 million turnover. And the CBAM, so the Carbon Border Adjustment Mechanism that I explained before, it applies to importers of high carbon listed goods like steel, cement, fertilizers. So it remains in place, but there is now an exemption for small importers handling less than 50 tons of products. So quite big change. To finish, so we spoke about InvestEU. There are more details about it. So it's a program to boost investment, innovation, and job creation. So the aim is to support sustainable growth. So it's designed to mobilize both public and private financing and provide guarantees to investors. So the guarantees are offered through the European Investment Bank and other implementing partners. So through this initiative, funding is facilitated for projects in key areas that sustainability, digitalization, social impact, and innovation. So what are the key changes? First, simplification of reporting and reduction of administrative burden. So the reporting process has been simplified. So reporting requirements have been streamlined, meaning less complexity for implementing partners and financial intermediaries. So we see that there are quite big changes. And the Omnibus Package reshaped sustainability reporting and due diligence obligations. And now we'll see with Mike that the change brings both challenge and opportunities. Thank you.
Thank you very much, Manon. So as Manon said at the beginning, the Omnibus Package is up to now a proposal. So it still needs all the process of approval, meaning it has to be presented officially to the EU Council and the Parliament. Then it has to be transposed in directives and in the delegation acts. And finally, it has to be transposed into national law regarding the EU member states. So this will for sure takes a couple of months till this omnibus package will be really adopted. In the meantime, there are still some clarification to be added. As Manon said at the beginning, it is everything focused now on companies only, and the CSRD before was also in the meantime applied to what they call small groups having the same thresholds than the companies. And there are still some uncertainties because now the main threshold is 1,000 employees, while this year already so-called NFRD obliged companies, which are more than 500 companies and listed, 500 employees, sorry, and listed, they have to report already this year. And it's not clear because what happens to the companies that are listed and between 500 and 1,000? Will they remain under the same under the same obligations than now, or will they also have to wait like all the other companies with more than 1,000 employees? And they are talking about introducing a new category, the so-called mid-caps, being between 250, which was the threshold now, and the 1,000 that is the new threshold. So there is a lot of clarification to be needed, and there will pass a few months till everything will be really approved and in place. In the meantime, what does that mean for the companies in the daily business? So we have a look first at the companies that are now under the thresholds, meaning 1,000 employees and, for instance, 50,000 turnover. What have they to do in the meantime? What do we recommend them to do? So if they haven't started yet because they already were in the planification of reporting on in 26 on the year 25, we really recommend to start, to prepare. I mean, you have 2 years now, you have more time, but it will come, and 2 years, they will run quickly. There are 2 actions that we recommend to give the prioritization because they will remain. The first one, as Manon said, is the double materiality assessments. So to assess all the impacts in out of your activities on the different ESG topics, and on the other side, seeing all the risks and opportunities, financial risk and financial opportunities that those topics may present to your activities. That's the first time. It's a very complex procedure to do the double materiality assessment because it also means that you have to assess the whole value chain and you have to assess the stakeholders that are impacted or those ones that are influencing you and have the impact in terms of risks and opportunities. And then, of course, the double materiality needs to look at all the impacts, risk, and opportunity, and just to detail them before deciding which one are remaining material to be reported on. The second point that we really recommend is to go very early on the measurement, the assessment of your carbon footprint, because it will be more or less mandatory. Unless you can prove that climate change is not material for your company, and honestly speaking, I haven't seen one up to now, those companies, they need in the KPIs give the figures about their carbon footprint. We will come later to very briefly do the carbon footprint, explaining shortly which are the scopes and which are the process to do such a assessment. And then, of course, in the meantime, for the 2.5 years remaining till the CSRD will be active in 28, of course, we need to monitor the regulatory developments and to anticipate already when it is clear what future obligations will come to prepare early to them. Very interesting in this context are the so-called LSMEs. So these are the standards developed by the EU for the small and medium enterprises as a framework. And I will come to that later to explain why this could be very interesting also for the ESRS obliged companies in 2 years. So that's what we recommend for the companies that already now know that they will probably be in the scope of the CSRD in 2028. The other companies, let's say, which have less than 1,000 employees, there was something needed. As Manon said, the omnibus intends to protect those companies from administrative burdens. So those companies that will do the reporting according to the standards, they need, of course, information from their value chain. And if you are a small company and you are a provider, a supplier to such a company, they, of course, need your information to include in their reporting. But to protect those small companies or these mid-cap companies, the EU, let's even say the EFRAG, that's the institution that is developing the standards, they already released the so-called VSME, the voluntary standards for small and medium enterprises. They have been released 2 years ago in the first version, but they revised this version now. And compared to the ESRS, the requirements are much significantly lighter, and they almost only focus on quantitative data to provide. Which we think is not such a good evolution in the VSMEs, that they have removed the obligation to do the double materiality assessment. This was a huge burden for small companies, I agree, but it also provided the assurance to know what is important for your company, which is not needed anymore. But this is more a protection for the small companies, that a bigger company cannot ask them beyond this data that are listed in the VSME. It comes with 2 modules, a basic module and a complete module. But say that complete module is the one that really provides all the data that could be asked by bigger companies. So that's a huge change for now, for every company between 250 and 2,000, which up to now were obliged to apply the whole ESRS. So they are really relieved by the VSME. But let's come back to the origin of CSR and what is one of the goals of having an ESG strategy. It is not only to be compliant to reporting standard. Beyond that, a solid ESG strategies has a lot of opportunities for the companies. If you take, for instance, the model of the shared value, which was developed by Michael Porter, you really can develop and create economic value alongside social and environmental value. Like you can really emphasize and improve your processes. You can reduce your costs. You can, with a very good social policy regarding formation, security, and health and integration, boost the productivity of your company. And of course, you can also, in terms of innovation, create new products and services, and thus boost your turnover in the needs of ESG from your topics from your clients. Then, of course, the usual suspect, it can differentiate yourself from your competitors by a much better image that you can create in the public and in your customership. And then, of course, what we see more and more is that ESG topics are more and more included in public tenders. So I give you the example in Luxembourg, for instance, the public tenders for transportation, they included 20% of ESG topics to evaluate the final score for the companies that participated. So if you don't have anything to prove and to talk about your engagement on these topics, you must really decrease your price heavily to be competitive to those who have a solid ESG strategy and they can prove what they have fulfilled and what they are intending and proving what they will fulfill. And we see it, of course, in the bankings, the evaluation of credit files. They also need, and they even are obliged to integrate ESG criteria. And of course, if you take big customers that have an ES or CSR strategy based on their material ESG topics, they will, of course, look for the supplier if they are in line with their policies, and they will for sure, beside the economic evaluation, also taking into account their ESG policy. So let's not only look at the obligations and the boundaries and the burdens from the side of the compliance to be of the reporting, but let's come back and look at the positive elements of an ESG strategy, as the EU also every time emphasizes, also in the clean in their clean policies. So, as I announced before, let's have a small look at the SMEs, because we think that they have a lot of potentials. So, like the VSMEs, they have been developed by the EFRAG in parallel to give a framework for the third wave companies that are obliged to the CSRD. That means the small listed companies. And they already have a significant reduction in the number of narrative data. So we even see that why should not they be the final ESRS? Because they have the same structure. They are focusing on the material topics and focusing on quantitative data, but they still have the necessary narrative data to give this solid aspect of reporting. And when you read them in detail, they are really structured in the same way, with policies, actions, targets, and metrics. And of course, as I already said, the double maturity assessment is retained and is the basis of everything, which makes the reporting meaningful. And so just to resume, the LSMEs are very close to the ESRS. They are often mentioned as the likely framework, at least for the mid-caps, let's say those between 250 and 1,000 employees. And we think that they can be a solid preparation while waiting for the final version of the ESRS that has to be defined by EFRAG and the EU Commission till the official launch in 2028. So the other point that I was focusing in on was the carbon footprint. We think that the carbon footprint will be the key metric in the coming years. So first, in the context of the EU decarbonisation goals under the Green Deal, and as Manon mentioned, the Clean Industry Deal that they launched now. I mean, if you want to get to these fundings, and you want to prove that you intend to decarbonize, but the first step to do is to measure your own footprint, because without having the basis, you cannot explain where you want to go to. And if we see all the reporting framework, if it is the CSRD, the LSME, the VSME, even the corporate border adjustment mechanism, the CBAM, and the CSDD, when it will be aligned in its final version to the CSRD, the carbon footprint assessment will be the basis in all of these frameworks to report on. And then, of course, as I mentioned before, if you see the public tender, so the public procurement procedures, if they want to include ESG topics, the carbon footprint will be one of the key metrics. It's comparable. You really can see in an absolute way, but also in the intensities. You can see how big is your carbon footprint according to your turnover, to your size of companies in terms of employees, and it makes it comparable. And it's a very easy topic to compare the different offers from the companies that are participating in these tenders. And then, as I said before, of course, in banking assessment for credit demands and also for financing decisions, the engagement for the climate change and the energy transition and the carbon footprint that is resulting out of that will be, of course, a very key KPI that you have to focus on it. So without now detailing too much what the carbon footprint is, just a glance at it. This is the scheme of the greenhouse gas protocol, which is the most used framework to assess a carbon footprint. So what you can see easily is that you need to assess over your whole value chain, not only your core activities done in your own facilities, but also all your upstream activities and your downstream activities. So basically, a carbon footprint assessment is divided in 3 scopes. You have a scope 1, which are all the direct emissions coming from mainly the combustion of fossil energies in your fixed infrastructures, like your buildings and your mobile infrastructures, typically your company vehicles. This is more or less the easiest part to measure because it's linked to consumptions, which basically you find on your invoices with the quantities. And if you take the according emission factors, you can easily calculate it. The second scope is the first indirect. It is linked to the emissions that happen to provide the energy. And it's mainly linked to electricity, because if you produce electricity, you have carbon emissions. Because if you take, for instance, France, where most of the energy is coming from a nuclear power plant, the emissions are very low, up to almost 0. But if you take traditional productions of electricity from a coal factory, for instance, the emissions can be very high. So that's the second scope, which, like the first scope, is quite easily to assess. But then comes the scope 3, which is really quite complex. It starts with everything on your upstream activities, starting from the purchase of the goods and the services that you need to do your business, all your capital goods, that's all your infrastructures when they have been constructed, and the emissions, they have to be calculated and included in your carbon footprint. You have everything which is related to the accessibility to fuel and energy. So this is what we call from the well to tank, okay? So refinery, extraction of petrol, and up to transporting it to the station where you can put it in your tank, which will be on the scope 1. Then everything of logistics, the transportation and the distribution coming from the goods that you need up to your infrastructures, all the waste that have been in charge of due to your activities. Then regarding your employees, everything about their travel, the business travel on one side, but also the commuting when they come from their home to your facilities. They also need transportation, unless they all go by foot or coming in the bike. But even then, because the bicycle itself has to be produced, but using their cars, using public transport emits also carbon emissions. And if you are leasing assets, you have to introduce them, include them in the scope 3. And then regarding all the downstream activities, of course, if you are producing companies, you need that your goods will be distributed and transported to the customers, the final customers, and all these emissions due to this transportation have to be included in your carbon footprint. If you produce semi-ready products and they need to be processed in a next step, all those processes they emit emissions and they have to be included. If they are used, if you produce final products, the use of it has to be included. If you take, for instance, a car producing company, but they need to include in their carbon footprint the emissions that will be provoked by the use of the car that they produced. And end of life, of course, also, if you produce the product, at some times it will not be used anymore and it will have to be recycled, destructed, burned, or whatever, which is also linked to emissions that have to be included. And if you yourself are a landlord and you lease assets, the use of these assets has to be included too. Two last ones is franchises and investments. If you take participations in other companies, you have in the pro rata to include them also in the carbon footprint. So now you can ask yourself, why should I introduce the use of something that I produce or everything that has been also already assessed by somebody else? The meaning is that on most of the positions, you have the choice. I mean, you can choose how to come to your office. You can choose the supplier that are producing the goods or services that you are using. So if at the same economic price, someone is much more efficient in terms of carbon footprint, but you can choose that one and thus reduce your carbon footprint. And if before I said that in the frameworks, you might be concerned directly or indirectly, let's take the first point in the value chain, the purchase of goods and services. So on the one side, you can be the one that does the assessment. So you need the direct information from your supplier to give the data on their carbon footprint so that you can include it in your own. But if you are a supplier, then you are indirectly asked to give your figures because your customer needs to include it. So we think that this is really why the carbon footprint will be very important in the near future to assess, and it's a little complex to make the structure, but it's very useful also in terms to see where you can reduce and how you can link this also to reduce costs and to be more efficient. In Luxembourg, it's a topic that is very important, and the government has put subsidies and a public aid program, which is called Fit for Sustainability. And according to the companies that you run, it can be up to 50 up to 70% aid to the cost that you need to make the assessments. We include the URL. You can see all the details about the Fit for Sustainability, and a bit of marketing. By the way, Deveco is one of the accredited advisors by Lux Innovation, so our fees are eligible for this program. So this brings us to the end of our presentation. We hope that you could have a good overview what are up to now, reminding that it is still a proposal. It has to be now validated by the EU in directives and delegated acts, but we think that they will not go back and say, okay, it was just a hoax. We will come back to the ancient version. It is very probable that this will happen. So we hope that we could give you a good overview about the changes to come and to give you some input how you can prepare yourself and what could be very fruitful for your company in the coming months and years. So now, as announced, we will come to questions and hopefully answers on this quite complex topic. So Jade, is there any question that you could collect in the chat room?
No, unfortunately, there is no questions.
Wow.
Okay.
So that means that all we have been very clear, and you are informed maximum, and you don't have any questions anymore, or the presentations leads to more questions. In that way, so we will send you our presentation and an email, and we are really ready to answer all your questions that will come maybe later and come back to you by mail or by direct conversation. So if there are no questions anymore, I would propose to conclude this webinar. Thanking you very much for participating, and seeing you hopefully for our next webinar. Thank you very much.
Thank you very much.